Hello, this is Tim Congdon. I'm chairman of the Institute of International Monetary Research at the University of Buckingham. I'm talking at almost the end of 2019. This presentation has been given in November 2019, and I want to give a survey of money growth trends in the main economies, and then to draw messages about the economic outlook for 2020. I think the best thing to do is to start with what I said a year ago, just so you can judge my credentials in presenting the analysis I'm about to give. And what I said in November 2018 was that beneath trend growth of world demand and output is more likely in early 2019 than trend or above trend growth. But I also said that the Federal Reserve in America was likely to halt or reverse policy tightening if and when weakness becomes apparent. And the situation in the Eurozone is a bit more problematic, but so a recession is not necessary. Inflation's low and likely to remain so. Now, as a judgment of the world economy in 2019, that was pretty good. And so I feel heartened about giving the same kind of analysis a year later. But I should just mention here that there is a theory at work. The underlying theory is the quantity theory of money, in which the determinant of the rate of change of nominal national income in the medium and long run is the rate of growth of the quantity of money. In all my work, it's broadly defined, meaning all bank deposits. And that long-run message then needs to be combined with a short-term message that fluctuations in the growth rate of money in real terms, after adjustment for inflation, are critical to economic activity in the short run. Not the only influence, but they're very important. The effect of fluctuations in real broad money growth is felt in particular in asset markets. So when you have high money growth, you tend to have strong asset prices, and then strong asset prices tend to feed into economic activity. I've developed these ideas in various places. I brought out a book in 2011 called Money in a Free Society. It's got some bits of work that are relevant to that. If you want to start a more heavyweight theoretical book, I recommend a book by a chap called Mark Blaug, Professor Mark Blaug, Economic Theory in Retrospect. It's some years ago now, but it remains a very good introductory text to the quantity theory of money. Okay, so that's how we do this kind of analysis. Let me start now with the United States. It still is the world's most important economy when we think about output in terms of current prices and current exchange rates. An alternative way of thinking in terms of purchasing power parity. I'm going to focus on current prices, current exchange rates. America remains the world's largest economy. Now, in November 2018, towards the end of last year, I was worried about a slowdown in money growth in the USA, and not least because the Federal Reserve was reducing the size of its own balance sheet by asset sales, and this was part of the reason for expecting a global slowdown in 2019. Let's then look at the same picture as of now. And you can see things have changed quite sharply. At the end, there is a very clear upturn in the growth of broad money in the United States of America. I didn't expect this. At any rate, it's what's happened. And given that it's there, one has to take it as a fact and just try and understand what's going on and what it means. First of all, there should be, on this basis, if anything, above trend growth in the American economy in late 2019 and early 20. I wouldn't overdo that too much, but it certainly fits in with the stronger stock market we've seen in the last few weeks. And also, by the way, the American housing market, a very good leading indicator for the economy. US house prices are up by about 6% on a year ago. Housing market activity not booming, but again, up on a year ago. These kind of things tend to foreshadow at least trend growth, probably above trend growth of demand and output in the USA in the end of 2019 and early 2020. One of the key issues here is, why has money growth been so high? There are two main drivers of the growth of bank deposits, bank balance sheets. One is when banks lend to the private sector, and the other is when they acquire claims on the government. Obviously, if the government's running a budget deficit, it has to borrow from somewhere. It can borrow from overseas, it can borrow from insurance companies and pension funds, or it can borrow from banks. If the government borrows from banks, that causes banks to grow their balance sheets, they acquire these claims on the state. And what's interesting about the United States at the moment is, in the last 6 months, US banks' holdings of US treasuries, American government debt, have gone up by 7.9%, to almost $3 trillion out of balance sheet totals of about $17.5 trillion. They've gone up by 7.9% at an annualized rate of 16.5%. Now, this may be because the banks are expecting a drop in interest rates. Of course, the Fed has dropped interest rates a little bit this year. Or it may be that the American government's running a budget deficit of about $1 trillion, $1,000 billion, and it's having to finance that to some extent from the banks. In other words, what we're having here is an example of a very important nation, to some extent monetizing its budget deficit and therefore having rather high monetary growth. This may roll on into next year. I don't know. Let's just watch the numbers month by month. At any rate, the message to me is that, if anything, the US economy will surprise on the upside in early 2020. And my word, those American economists forecasting recession in 2020 are going to be wrong. The Federal Reserve doesn't analyze things in the way that I do. It stopped publishing broad money numbers in 2006. Nevertheless, I'll stick to my last. I think there's going to be a reasonable outturn in the USA in 2020, and perhaps President Trump will stop complaining about the Federal Reserve. Anyway, let's move on now to the Eurozone, the second important developed area of the world economy. This is the chart going back to the start of, not quite the start of the single currency, but going back to 2005. You can see that jump in money growth and collapse with the Great Recession. This period of rather indifferent growth rates of broad money when they did have the second recession. And then in the last few years, and let's now focus on this more specifically, there has actually been around about, roughly speaking, 4 or 5% a year growth of broad money since late 2014, coinciding with quantitative easing, better macroeconomic outcomes. And now again, surprise here is that the last few months has seen an upward kick to the growth of money. There's obviously big debates at the moment about monetary policy in the Eurozone, with the Northern Bloc, led by the Bundesbank, somewhat worried about the too much ease in the stance of the European Central Bank. New president of the ECB, Christine Lagarde, taking over. My verdict here is that while the situation is complex and very political, that in fact money growth should remain at a reasonable rate through 2020, not least because the banks are growing again. They're growing their loans to the private sector, not at a boom rate. As this chart shows, they're growing at around about 3-4% a year. Much higher, by the way, in France, not so much in Italy. It varies around the Eurozone, but overall, they're growing their key asset, their loans to the private sector, by about 3-4% a year. So bank deposits likely to be growing at, say, same sort of figure. And if there is a bias towards ease, perhaps somewhat higher, relaxed about money growth and macro trends in the Eurozone. About China, when I come on to the two big developing countries, China and India. Here's one picture of Chinese money growth, and here's another. And the two pictures look the same. Well, in fact, the first one was the picture as of November 2018, and the second is the picture as of November 2019. They're virtually identical. They're identical to give this visual impression because the last few quarters, that what's happened in 2019 is basically money growth has been straight lining at around about 8% a year. On the face of it, this implies stability, and I think that's a reasonable deduction to draw as of now, but it should just be noticed that the Chinese authorities have been attacking the so-called shadow banks, and that may have been one of the reasons for the somewhat disappointing growth of demand and output in China in 2018 and 2019. At any rate, that's, to me, it's very much now being absorbed into the economy and therefore doesn't have any negative implications about 2020. I think one has to say here that the attack on the shadow banks in China is part of a wider attempt to, sanitize, to clean up, to centralize, to control the Chinese economy by the present communist leadership, which is very different in character from the leadership under Deng Xiaoping and the free market people in the 1990s and the early years of the 21st century. And all the history is that this kind of centralization in the end is unfavorable to economic growth. It reduces the dynamism of the economy, and this coincides with increasingly adverse demographics in China. As the population gets older, more people retire, and they therefore lose the boost that comes from having a young workforce. So I think a reasonable comment about China is that the trend rate of growth of output, it was incredibly high in the 1990s and the opening years of the 21st century, is falling towards, say, the 3 to 5% a year range. Let's then think about India, which is the second big developing economy. Now, I'm going to make one or two critical remarks about India, but I think it's quite important, to get India into context. India's population is over 1.3 billion people. It's catching up with China. China's almost 1.4 billion people. And India's population is expected to overtake China's in the next decade. Therefore, we'll have more people in every country in the world. Sure, it's a massively important economy. Well, not really. Yeah, it's important, okay, but it's very secondary relative to China. And this is partly because incomes per head are much less than in China. Productivity is lower. But the other big reason is that India has got a more closed, more inward-looking protectionist economy. And to some extent, with the current BJP government, Hindu nationalism and so on, this is actually being taken further. It's moving more protectionist rather than opening up the rest of the world. So the significance of India to the world economy is much less than you might imagine. If you look at a list of the world's biggest importers, and you can see that both the UK and Japan, and of course Germany and France, they're all more important to the world economy in terms of importing than India is. India comes down at 11th place, not much different from Canada or Mexico, behind South Korea. So when we talk about the Indian monetary and financial scene, it does matter, but it's nothing like as important as China. Anyhow, if you look at the growth rate of money in India in the last 2 years, you can see again there's a dip, which is because of a rather silly demonetization episode in late 2014 or 15, I think it was, and then straight lining since then. Roughly 10% a year growth of broad money with a straight line. Apparently a stable message for next year. India, nevertheless, is beset by various misgovernment and misgovernance issues. Maybe these things are going to threaten the trend growth rate over time. We're left with the two less important parts of the developed world, Japan and then the UK. Japan, this shows you the growth rate of broad money going back to 2005. You can see that, notice the axes, the various fluctuations, but all within a very narrow band. And in fact, in the last 5 years, the growth rate in annual terms of broad money has been consistently between 2 and 3.5% within this very narrow band, and it still is. So I don't think one can draw any very major message from this for the world economy. One should also say that for 20 years or so now, Japan has had the slowest growth rate of money of any country in the world. It's also had the slowest growth of normal GDP, very low inflation, and constant worries about deflation. Finally, the UK accounts for about 3% of world output. The rate of growth of money slowing down through 2018 and much of 2019, but actually has picked up in the recent past. So insofar as there is a positive message for next year from all of these charts, all the analysis of all these countries, the UK fits that story. Okay, so we've gone through these 6 important nations. How do we summarize all this? Gone through tremendous pace, but I hope it's been clear what I've been saying. First of all, these money trends do not justify any forecast of recession in 2020. And all those people, Krugman, Rubini, Summers and so on, have been talking about this, to my mind, have had no basis for what they've been saying. If anything, what's happening to money growth trends argues in early 2020 of actually probably somewhat above trend growth, a good start to 2020 in the major economies. We don't know what's going to happen to banks and money growth, say, in summer of 2020, so we don't know what's going to happen later on next year. But to me, the most sensible view is trend growth with low inflation. A lot can happen between now and then. As far as China and India are concerned, and the developing countries more generally, I think one's got to say that, again, the argument has to be stability, similar conditions in 2020 as in recent years. However, there are a number of, in my view, discouraging trends about the supply side in these important economies, which suggest that overall the trend growth rate of world output is going down. We had a fantastic boom in the world economy over the whole period from the end of communism in 1989 through to 2018, and despite the Great Recession in the middle, but the various adverse developments from demographics and the shift towards planning and centralization in many economies, and protectionism too, argue that the trend growth rate of the world economy is moving back towards 3%, having been 4% or so for quite a long time. Thank you.